Hey everybody, good afternoon. It is Sami from the Black Room here. I hope you're doing well. Hope you had a great weekend and welcome to tonight's video. If you're joining me, feel free to leave a comment or uh, press the like button so I know you're here and watching. Wanted to do a quick video about the ways in which trends end. As you know, as some of you know, the definition of an uptrend is higher highs and higher lows. When we say higher highs, higher lows, we mean higher pivot lows. See these lows, they're all consecutively higher. And then higher highs, we're talking about the pivot highs, right? So they need to be consecutively higher. That's actually the definition of an uptrend. Now, there are certain trends um, that are better than other trends, and we have three other criteria that we use to judge by whether the trend is playable or not. Okay? Again, you can find an uptrend that has higher highs and higher lows, but it might not be playable. There are other ways, there are other things or other criteria to use to determine whether the trend is playable or not. Okay? If the stock, let's say, were to turn around and break the trend and start to put in lower highs, lower lows, then that stock would be now in a downtrend. That is fairly simple and easy to understand. But stocks don't usually end the uptrend in a casual way. That's why if you look at I guess we can just look at the market monthly chart. We've been in an uptrend for 10 years. So again, unless the stock or the market accelerates, so here it is, up, 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 up. We did get some acceleration. Let me see what kind of scaling I'm using at the moment. We did get some acceleration in the market. Yeah, I'm on logarithmic. So look at that last run up. And in January, we got the biggest green bar I see on the entire chart. See this, guys? You wonder, some of you, why did we get that sell-off in January and February? Why are we getting this sell-off now? Well, look at this. Up, 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 and then the biggest green bar the chart has ever seen in the last 10 years. Okay, we had a temporary top, and then we had another run up, right? Far away from the 20, farther away from the 20 than we've ever been. And then so that resulted in a top. So that's the usual way stocks top out. Let me show you something even more dramatic. Med, look at this, up, 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 and it goes vertical. Actually, the med was a short. We tried to take advantage of, it was a short in the strategic swing trader, was a play. Here it is, that was the top. Nailed it at the top, got in it, but I did get out of it on this day, and it continued lower after that. But the point is, we try to take advantage of the climactic tops and bottoms through swing and core trading. Square, I made 40 bucks on it. And this was also a call for the strategic swing traders as a short. Why did I short it here? Because of the monthly chart was vertical, right? WWE, though this was not a play. This went climactic. ABMD, right? Look at that climactic move, the acceleration away from the 20 MA. ABMD. What else? Ollie just recently topped out. It happened through a gap though. I wasn't able to catch it. LOXO, right? You get the point. Even Netflix went climactic. NFLX, right? Even Apple mini climactic a little bit. MDGL, right? Look at that climactic pop, and then the stock dropped $200. This was also a call, but I got shaken out. So again, I try to take advantage of trends when they end through a climactic move, and I do that through swing trading in the strategic swing trader program. But stocks don't always go climactic like that. Sometimes something like this happens. Can we say this stock is still in an uptrend after today's gap at the open without even seeing the bar? Was that stock still in an uptrend? Think about it for a second. We'll come back to this question in a minute. How about when we have a move like this? Let's just say like the market had at the beginning of October. Multiple bars down, sharp, fast move that broke multiple support levels. One support level, two, three, all in one fell swoop. Was the market still in an uptrend? If you say, well, no, it was in a downtrend, then my question is, where were the higher highs and lower, I mean the lower highs and lower lows? I don't see any. There were no pivots. And today the market also did something that I'm going to talk about in a second, which is here. Let's go ahead and talk about it now. The market was in a 15-minute downtrend. So what happened? How about here? Were we still in a downtrend? So again, in a downtrend. How about here? Are we still in a downtrend? Were we still in a downtrend? And what's the answer? The answer is no, because this was one of the three ways in which trends end. Okay, or in which trends suddenly end and we don't need higher highs and higher lows in this case. One of those ways is when the market breaks, when a sell setup fails. So we don't have uh, clearly defined lower highs and lower lows, but we can tell the stock is in a downtrend. Every time it rallies, it drops, right? We can tell it's downtrending. And take a look. Here's the last rally and the sell setup. And when you get a sell setup failure, so this is the first way, the first of three that I'm going to teach you here, share with you here, in which stocks or the market ends their trend suddenly. If you have a sell setup failure, so here's a sell setup means a counter rally in a downtrend to a moving average, but it doesn't have to be to the moving average. And then the sell setup fails to complete to reach the prior lows, right? So the stock, in this case, the market, the Qs, failed to complete the sell setup, failed to reach the prior lows. When you have a sudden shift like this, that's what's known as a sell setup failure. A sell setup failure creates a higher low and a higher high, all in one fell swoop, in one shot. And the stock, once that happens, or the market in this case, this is the Qs, is said to be in a presumed automatic uptrend. In an uptrend, you don't need to have higher highs and higher lows. And we had a pretty big move up. Does that make sense? So the first time we get an automatic, a presumed automatic end of the trend is when we get a sell setup failure or a buy setup failure in the case of an uptrend. The second time is when we have a sharp, fast sell-off that breaks two or more support levels. See this? Two or more support levels. Then, in this case, we broke three, we broke four. Then the stock is said to be in a presumed automatic downtrend, and the next sell setup is playable short. So next sell setup worked. Well, this sell setup didn't work. The next one worked. Next one here worked. So that's another time when you can presume or when you can assume that the stock or the market changed the trend without waiting to get the lower highs and the lower lows. You don't need to get the lower highs and lower lows. You can just assume that the stock or the market in this case is in a downtrend if you get a sharp, fast sell-off that breaks multiple support levels, two or more. That's the requirement, two or more in one shot, in one drop. The third time, which is my favorite, is when it's through a gap. When you have a gap like this, that is not only that didn't just gap under support and broke the uptrend, it also was devastating to the longs. I mean, this stock was at all-time highs, maybe. I mean, super, super bullish, right? Super, not at all-time highs, but really, really bullish. And then today, gap down to end the uptrend, and notice it gapped under the base. Gapped under the base. So every single person that bought it, that has bought it actually all the way back, looking all the way back from November and even before that, is now underwater but the most important is the most recent buyers. They're underwater, right? So that stock is now in a presumed downtrend, and from here on out, I would only look to play it short, or unless it goes climactic, then I can look for a dead cat bounce. Does that make sense? Those are the kind of gaps that when I see, I start salivating at the open. When I want to just trade them. Of course, the stock happened to be super wild and thin. It, I guess, averages maybe about 500,000 shares. It did how much today? 14 million. Let me just take a look at it on my other platform to make sure. You see, when I click on this green is too bright for me, so I can't usually read it. Yeah, we did 15 million shares. Here it is, 14.97 million shares. How much does it normally do? It does about, I would say, not even 500,000 shares a day. So that's a 300%. 300%. That's a 3,000% increase, right? Basically 30 times the average, almost. Unbelievable. But not really unbelievable because it's what's expected to happen when you have a catastrophic gap like this. This was the play that I didn't really trade that well today. I didn't feel I traded that well today, but it's the play that made most of the money for me today. I think. Yes, TVTY, 2600. And I didn't really manage it well because it was so wild. It just jumped out quickly. Otherwise, it dropped how many dollars? From 33.30 to 25.90. So $6. Okay, over $6 from high to low. So again, today we learned that there are three ways in which trends suddenly end without going climactic and without putting in lower highs, lower lows. The first is through a gap that ends the uptrend. This is easy. The second, which you probably have never heard before, is through a sharp, fast sell-off that breaks two or more support levels, all in one fell swoop. And then the fourth, that's the second. The third would be when you get a sell setup failure, like we did on the 15-minute chart. That immediately, that immediately puts in a higher low right here, higher low, and then once it fails on the sell setup, once it breaks the last pivot high, then you get a higher high. You get a higher HH, higher high. All right. So those are the three things that I pay attention to when I don't have lower highs and lower lows, because it pays to be the first one in. So when the trend ends quickly, I want to be the first one in if I can. That's why on October 10th, actually, October 4th, the very first day that we broke down. Now we hadn't yet, at the time, we didn't break the support, but I imagined we were going to have follow through to this bar on look at the volume. I declared this was the top. I recorded a video on October 4th. If you look at the Black Room watch list on Facebook, you'll see it. And then I did another one on the 10th, confirming that this was the top on the 10th. I did several videos titled "Why I Think the Market Topped Out." Okay, so you can look for them if you want. But at any rate, so I want to be the first one in. I want to be the first one to turn bearish. I didn't do the Qs short. I rarely, if ever, trade the Qs, but I did the SQ short on October 4th. That was the entry on SQ, and it fell apart 40% in like 5 days. So again, it pays to be early, to be the first one in. All right, guys, I hope you enjoyed this video. If you have any comments or questions, feel free to leave them in the comments section, I guess. If you like the video, feel free to share it. And if you want to join me and participate in trades like these, some of these, then check out the Black Room. Okay. Hope everybody's doing well. Have a wonderful evening and talk to you soon. Take care, everybody.